Kathy Lean with BK4X. So U.S. equities are trading higher today, U.S. yields are trading higher today, and the U.S. dollar, which had traded lower during the Asian European session, is trying to claw back its gains in the early New York trade. All of that has to do with ongoing optimism that some sort of agreement will be reached by the White House and Congress before the X date, where the Treasury basically runs out of money and options. And that optimism is keeping risk appetite strong and supported. Taking a look at the week ahead, we don't have much in terms of data. We didn't have any U.S. data today. Next week is really about the Fed minutes and the personal income, personal spending numbers. Euro traded higher thanks to stronger German inflation data. But overall, I think, with the Eurozone, the DAX is also trading really well. Nikkei at 33-year highs. So those are supporting the risk rally in Euro as well as yen crosses. Canadian retail sales numbers came out this morning. They were better than expected, negative, but still better than expected. That appears to have lent some support to the Canadian dollar, along with the gains that we're seeing in oil. Gold is holding above 1950 for now, which seems to be where it's found a little bit of support. But if we do see a bit more of a dollar strength, that could at the support level could actually break. The best performing currency is the New Zealand dollar, with strong credit card spending and trade data overnight. The reason why I'm talking about this is because next week we have an RBNZ, Reserve Bank of New Zealand, rate decision, and they're expected to raise interest rates, which means that the gains in Kiwi could be sustained. So overall, I think the risk rally in equities currencies should persist for the rest of the day, unless there's some bad news or setbacks in debt ceiling talks, and that should be where we kind of end the week heading into the new trading week as the market continues to look for developments on that front. Have a good weekend.